Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028201. He is a gentleman. He is a scholar. He is
Tyler Crawley.
I just realized I didn't bring my water to do the show. I like to call that operating without a net, because if I get a tickle in my throat or, I don't know, something, I start coughing, it's over. Now, it's not as bad on a podcast. Used to be kind of rough on radio. Don't recommend it. But here we are. Tyler Crawley, waterless, here on the Tuesday edition of Wilmington Mortgage. I am the aforementioned host of this podcast. Tyler Crawley, of course, loan officer, Town Bank Mortgage, right here, Wilmington, North Carolina, where we break down the top stories impacting mortgage rates every single weekday, water or not. So what do you think happened to rates today? So yesterday, rates were up. Rates were down. So what do you think happened today? That's right. Rates were up. They were up a little bit on some new, really the announcement. Actually, it was the announcement from the Trump administration. First reported by the Wall Street Journal, the Pentagon is planning to deploy roughly 3,000 troops from the Army's 82nd Airborne Division to the region. Like I said, according to U.S. officials, first reported by the Wall Street Journal, officials stressed that a decision to put boots on the ground in Iran has not been made, but the move gives Trump additional strategic flexibility. So we're not putting boots on the ground. Close by is where we are. The announcement came as tensions remained elevated across the region. Iran launched waves of missiles targeting Israel and Iraq, while Persian Gulf nations reported additional strikes. So Iran was stepping things up. At the same time, President Trump said negotiations were ongoing and that Iran wants to, quote, make a deal, offering a competing narrative of potential de-escalation. So we talked about this yesterday. I mentioned in my video yesterday that Iran wants to say that things aren't going well, or there's no deal, nothing's going to happen, war's going to go on forever, because they know that's not what the American people want. And the worse things are going, or the potential that it could be bad and ongoing, could put pressure on the president to pull out. And then, of course, President Trump, the administration, has sort of the opposite motivation, where they want to say things are going well, things are good, mostly for financial markets. So gas prices will fall, equity markets rise, bond yields fall. So it's hard to really know what's going on. But the fact that we are, the deploying of the troops, not on the ground, but nearby, is sort of an indication that things might not be going so well. So I think that's why the markets reacted that they did. Brent crude climbed back above $100 a barrel, though it remains below last week's peak levels. So it did see a jump there. Equity markets were surprisingly quiet. So we did see, NASDAQ was down not even 1%. S&P was down about 0.3%. Dow Jones was down barely, or not even 0.2%. So, we did see a little bit of a sell-off towards the end when I was looking at this around 3:30. There was almost no change in equity markets. So we did see some movement there. And then, as I mentioned, of course, rates, the 10-year jumped about 4 or 5 basis points, kind of negating the gains that we saw on Monday. So not great. What was interesting, though, was JP Morgan CEO, Jamie Dimon, who is not a Trump fan. In fact, I think Trump is suing him for debanking him after January 6th. He actually, he wasn't like making an argument for Trump, but it kind of was. It wasn't like, it's not like an explicitly pro-Trump argument, but he was sort of making an interesting argument about the long-term benefits of the war. So Jamie Dimon said, quote, "The war makes it a better chance in the long run," talking about peace negotiations or peace in the Middle East. He said, but he added, it's probably riskier in the short run. So he's saying, this could potentially be a good thing for peace in the Middle East overall. If we are able, because Iran's a destabilizing force. It's the largest state sponsor of terror in the world. And so having, a new regime or having just something different that's hopefully not worse could actually be a good thing for the Middle East. That's what Jamie Dimon's saying. And so he's like, yeah, short term, it's going to be a problem. There's going to be fighting. There's going to be issues. Financial markets aren't going to like it. But long term, changing the regime of Iran could lead to a situation where you do have a better chance for stability in the region, I think is what he's trying to argue. So it was kind of funny that Jamie Dimon came out because, like I said, Jamie Dimon is being sued by President Trump. But he did come out and was like, hey, I kind of see where he's coming from here. So yeah, that definitely had a negative impact on rates, no doubt about that. We also had a 2-year bond auction that was not good. This was right around the time that we were hearing the announcement of troops deploying to the region. The 2-year Treasury yield jumped more than 9 basis points to 3.925. That's crazy that we could see the 2-year above 4. That was after weak demand for $69 billion auction. Nice. The bid to cover ratio in the 2-year auction was only 2.44, narrowest bid since May 24, and direct bidders were the weakest since March of last year. So definitely some weakness in the Treasury markets. There's a lot of reasons for that. There's always been this sort of idea of this sort of flight to safety where people go to bonds when they're worried about overall conditions. And while that is true, the problem is the U.S. has a major debt load. We're running a $2 trillion deficit every year. And so if all of a sudden we're adding $500 billion, now we have a $2.5 trillion deficit, that's going to put a lot of supply, a lot of treasuries out there. And is there, are we reaching kind of a tipping point for demand for treasuries, especially with other countries in the U.S. not seeing eye to eye on certain things? China has already pulled back on their holdings of U.S. treasuries. I think the lowest level since like 2008 or something along those lines. Japan, of course, has its own issues that we've talked about many a times. Are they headed for a debt crisis? What sort of impact would that have if the largest foreign holder of U.S. debt is having its own debt crisis? So there's a lot of things that are at play here. And so it's not saying that you're not seeing somewhat of a flight to safety, but people are saying, you know what, equities might actually be better, or commodities, what do you call it? Rare. What do they call? What's silver and gold called? What are they called? They're not rare earth metal. Is it metals? Rare earth, whatever it is. I don't know. My brain is fried today. It's smoky here. They're doing some kind of controlled burn at Orton Plantation. It's very smoky outside. You got the pollen. My brain's not operating the way it should be. So whatever that is. So that's one of the other reasons I think you're also seeing a negative movement in rates. And then also, just to throw it onto the pile, because it is kind of a weak week for data. The Bank of England, we saw some comments from Chief Economist Hugh Pill, who said the Bank of England shouldn't allow uncertainty to delay efforts to contain a rise in inflation as energy prices surge in the aftermath of the Iran war. The UK central bank last week, of course, left rates unchanged at 3.75%. Pill says, I stand ready to act to contain the lasting components of any new inflationary pressures. The fog of uncertainty in which we always operate, cannot be an excuse for inaction. Pill's comments suggest he might be prepared to vote for a raise as early as April. However, it should be noted that Pill has long voted for higher borrowing costs than many of his fellow rate settlers. So he's a little bit more on the cautious side, more bullish on what's going to happen with the economy. So it could just be that, or this could be a sign that we're going to start seeing central banks raise rates. Take it as you will. It's not good news. It might not be as bad as maybe I'm thinking, but it's definitely not good news. So yeah, I mean, considering the news today was not great, it's not really that bad that rates are only up 3 or 4 basis points. Could have been worse. I don't want to say that. I'm afraid I'm setting a curse for what's going to happen on Wednesday. So yeah, we'll see what happens. But that's all I got. I mean, man, we barely got 10 minutes. That's all I got. See you guys tomorrow. You guys have a great rest of your Tuesday. We'll see you Wednesday for another edition of Wilmington Mortgage. And remember, as always, do not wait to buy real estate. You buy real estate and wait.